All right, guys, and we are back with the podcast. I have Peter Pan here with me today. Thanks for coming, Peter. He's always here with us. If you don't know, Peter is a level 3 CFA. Is that correct? Yeah. Level 3. One of the hardest certifications to get into the financial market. Just so you know, if you have a CFA, it's sort of having a master's degree on economics, yeah. Right? This is what they equalize you. So we're going to be talking with a very professional person today. Hopefully it can help. And, you know, I do have my papers here. I have a few questions I want to ask for Peter. And if you guys want to ask some questions to Peter as well, please put down in the comments. I know we won't be able to look at the questions right now, but in the future, once we do it again, maybe in the next week or so, I come here and ask your questions to Peter, all right? But just related to the market, not only to what do you think about this or that, more related to the market. Okay, so welcome, Peter. Really good to have you here today again. And we want to talk a little bit about the Forex, a little bit about NVIDIA as well, that we were talking before we start beforehand. Tell me, we saw this morning the FOMC minutes, right? Yeah. Feels like the dollar, the US dollar index, haven't reacted on a good way. Even though that we know that the Fed have stated, well, not stated, but have proclaimed that they won't be cutting rates too soon. Wouldn't that be positive for the market? And why did the US dollar react in a negative way instead of a positive way?
Okay, so there is two parts. The first part is that the market expectation is changing quite fast, especially when the CPI comes out, when the PPI comes out. We can see the bond yield is going up, which means that the market is delayed the expectation of interest rate cut. So from that part, I think it should support the US dollar, right? However, at the same time, we can see the US bond yield goes up very fast, especially after some of the federal governors speak something. They all said that the market expectation is too positive, and they won't cut rate that much. They will only cut like 3 times. That's what all they say, right? However, the market is changing based on that.
The market was expecting 7 base points.
Yes, before.
This is too crazy for me, in my opinion.
And right now, market is expecting like 3 to 4 times.
Yes.
And also, they are expecting after 3 cuts, there will be a rise, which is very weird in the market, in the future market. There may be some price mistake or something. We will see later. However, at the same time, the US bond yield goes up, the Europe and the UK bond yield is going up more faster than United States. So that's the reason why at the same time bond yield goes up and also the US dollar is performing very bad. So I think the main reason behind that is not mainly because of the expectation. It is also because of the euro dollar goes up more than US dollar. The British pound is going further than the US dollar. That's the main reason to drag the US dollar down.
Okay, so there is a correlation between UK, Europe, and US going on through, let's say, this interchange, this play that is going on right now.
Yeah.
Okay, so in my opinion, I think, you know, keep talking about the Fed here, about the FOMC. When I knew it, that the market was expecting 7 cuts, you know, month by month, pretty much. You know, we just had January and February without cut, and then it's supposed to be starting next month. That we're going to talk about that in March. But the market have already priced off this, so the market is not expecting anymore the first cut to be in March after 2 weeks ago FOMC meeting and the release, the speech by Jerome Powell. And then we had now the market pricing a cut by June, July, right? So in my opinion, it's much more, we're seeing a lot of robust data from US, you know, stronger US CPI, as you just mentioned, stronger GDP, PMIs are quite well as well, you know. And then on the other sides, we having a bit of a problem going on Europe and as well on UK. So in my opinion, there is a potential for euro dollar to go up this year, especially because once the Fed starts to cut, maybe the ECB will keep holding for a few months and then cut again. And therefore, this is going to be my play between ECB and the Fed on the interest rates. Do you think that's?
I think it's quite a very, very interesting topic.
Yes, correct.
When we talk about ECB, it is quite weird, their attitude.
Yeah.
Because all over like the G10 countries, the Europe area has the worst economy there. Their GDP is bad, especially Germany.
Yes, Germany. We just had
economy
Germany.
is super bad.
Yeah.
However, the ECB is still keep their hawkish opinion.
Yep.
So I think that's the reason why the euro dollar is going up right now. However, I think it all depends on the economy data. So tonight we have the France, Germany, and the euro area PMI, and also the US PMI. I think that may change the opinion of the market again. So they will finally think back, like ECB will finally cut the rate before United States, not caring about what the ECB is recently talk about. Yeah, I think US dollar is still getting the upside trend. However, there is some fluctuating there.
Yes, correct.
But the big direction is still upside.
Yeah.
Maybe the SIP space will not get that big like 2 or 3 months before, but still upside trend.
Well, if we look to the actual DXY since the beginning of January, it has been on an uptrend.
Yeah.
We've been up for the whole year already.
Yeah.
Well, no, the whole year, it's like a month and a half, nearly 2 months, because February it's going quick. I don't know, for me. I was talking to a few people, they're saying that it's not going quick for them, but it's going quick for me. But when we look to the US dollar right now, US dollar it is strong. And we can't only assume that, okay, it's over the strength on a small pullback. Because market doesn't work like as we think, only up or only down.
Yeah.
It does have ups and downs, and it going somewhere, So I do believe on your rhetoric as well. Kind of strange what ECB have been keeping the hawkish approach, even though they have very bad PMIs, very bad CPIs, very bad, good CPIs in a sense, but bad for the CFD markets, for the euro area, right? For the euro actual currency, and bad as well for Germany. If we look Germany has German holds most of Europe, all right? In terms of gas, in terms of PMIs, Germany is the best and the biggest producer. Especially in terms of machines, like robotics sort of things, cars producing, and all of those types of things. It is made in there. And if we've seen bad PMIs, that just makes me clear that, okay, this is not working well.
And it's the lowest in the history.
In the history,
manufacturing PMI, lowest in the history.
Yeah. So then it keeps me thinking, right? Maybe it doesn't work, because if we continue to have this bad data for the Europe and for the euro area, maybe the US dollar will always be the one that investors will be looking to, to long it, and won't be looking to put money on other places like UK or Europe or whatever.
Yes. My opinion actually is very clear. If the US CPI is that high, keeping that high, like the core CPI is keeping more than 3.8%, it is now 3.9, right? If it is keep that high, the Fed won't talking about cut the rate.
Nah.
It is not fit by their formula. So the CPI, the reason behind the core CPI is high is because the shelter, the transport, and the Medicare, the service CPI it's very high right now. Yeah, there is many things behind that, but if it is that high, especially for the owner's equivalent rent is not cooling down, the CPI won't drop. I don't think the US dollar will have a short opportunity right now.
Well, that's Peter's take, and I do believe as well, on that. So pretty interesting how all it's gonna be. And I'm not gonna lie, I was one of the people that would believe that the Fed would cut in March.
In March?
I was. Until the CPI came out.
Yes.
I was like, no way they were gonna cut
Yes,
in March.
I think everybody is thinking about that,
Yeah,
right?
everyone was. The whole market, like 60, 70, 80% off one time.
Yeah.
I would look at the CMA Fed Watch too. Like everyone was expecting to cut in March.
Yeah.
Everyone. And I just look at today again, all the ones that were expecting May, they jumped to June now. So where are all the 7 cuts?
Yeah.
Come on, 7 cuts.
So let me ask you another question.
Yeah, go for it.
If you talk about the Australian interest rate cut, do you think this year will cut like the market expectation 3 cuts? Because we have experienced the lowest CPI, like 3.4%.
Yep.
Monthly CPI, right? So
Look,
do you think it's?
I don't think they will cut.
Yeah.
I don't think they will cut. If they cut, they will cut like Q4, Q3, 1 or 2 times. 3 times, I think it's too much.
Yeah.
They will continue to keep holding it. They will continue to see as well, not only Australia development, but New Zealand development, and as well all of the other globes, all of the other G10 economies, to see if the economies around the world is actually cooling down as well. Because remember, if they start to cutting too early, compared to the G10 currencies, G10 countries, that's going to be a problem for them.
That's a good point.
Yeah.
Yeah. My opinion is kind of.
And
yeah.
Imports and exports are not good in Australia.
Exports, yeah.
So, keep that in mind. If they cut, they will be reducing Australian dollar value. Therefore, the trade balance between them, us, and other countries will be degenerated and will be lower. Therefore, investments will go lower, and the Australian dollar will be in a very big problem.
Okay.
Yeah, that's my view. That's what I'm thinking.
Yeah, my opinion is the same. I don't think they will cut the interest rate very fast. But the reason behind that is, just as I said, very simple. It's about the CPI. I think the Australian CPI will still keep very high. The last time 3.4 is overrated. I think maybe this month or next month it will rebound back to 3.7 or 4%, above 4%. The main reason behind that is also the rent. The rent is super hot. Yeah. There is many reasons behind that, but I think the main reason is the immigration. We can see all over the world, like Singapore, like Australia, like New Zealand, like London, and Canada. All of those countries has a big immigration numbers last year. And at the same time, their rent is going crazily high. Yeah. So that's the main reason I don't think the Australian CPI will cool down, just like what we have seen right now. I don't think so. Yeah.
So you think that the actual cool down is sort of a fake cool down?
Yeah,
that
fake cool down.
And it can continue to
especially,
go up?
So last month we have the Christmas support in electricity.
Yes, correct.
It also dragged the CPI down, but it's not a long thing, right? It's a temporary support. It won't be long. Yeah.
Yeah, that's what I was thinking, because I did get quite a miss on Australia CPI. I don't know if you remember, but it was quite peculiar what happened last year, 2023, on the Christmas time. All the promotion started earlier than what it used to start. I don't know. This may be something off my head, but it started earlier than what it should started, and it kept longer than what they. We were in mid of January, and they still had promotions. And I was just paying attention that, okay, this will have a massive inflation because people still spending money. But this is, of course, is a discounted price. So what happened with the PMIs in Australia, the services PMI, it didn't came hotter. So this is all of the things that put me in perspective, like they won't be able to cut as, you know, the market is expecting 3-4 cuts this year. Some of the big banks, they are expecting cuts as well.
Yes, they have already reduced like fixed loan rate.
Yeah, correct.
Mortgage rate.
Yes. Actually, I don't know if you, as you talked about that, one of the person here, they asked me on a webinar, and I couldn't answer them because I didn't know. So how does the mortgage work? Because so the guy had a mortgage, and the rates went up, but his mortgage didn't went up as well. It just stays the same. Do you know how does that work, or you can?
I think yes, for just one person. If the interest rate going up, his mortgage won't get influenced, especially if he has like 2 years or 3 years fixed rate. However, when we talk about market, we like pack it as a whole. So this person doesn't like refinance, but the other person will. There will always be person that do refinance. So when the interest rate goes up, the market average mortgage rate will keep going up, keep rolling up, like
the book, right?
Yes, with the, you can say with the bond yield, or you can say the variable rate with completely with the what the RBA is setting.
Okay, got you. All right, so if you're watching it, you have the question now. All right, anyways, so I just want to go and talk about Japan pretty quick.
Okay.
I think me and you, we are big believers that that's going to be a huge trade if it happens. What are your take right now on the NIRP? Because, you know, right now Japan is on a recession. We just had twice quarter GDP negative. So what are you expecting on that?
It's really hard to say about how Japan will do in future. And also the Bank of Japan, their attitude is hard to expect right now.
Yes.
Sometimes they say they will hike, the other time they say not.
Yes.
So in short term, especially the market is, the economy does bad. So in short term, like 1 or 2 months, I don't think the Japanese yuan will be quite strong. They were still working on the economy first, and then other things. However,
because we are on the 150 level on USD JPY.
Yes.
That was November, was the intervention. All right, was the level of intervention. And we had 9% down movement on USD JPY. So that's exactly what I'm thinking right now. Will the USD JPY break through these and then goes to 152?
Actually, it has already broke once. So I think back in 2 years or 3 years ago, there is also intervention. The level is 145.
Right.
But after it broke, they never intervened again.
You mentioned
until
about that.
150. So it's like a stage. If you across this stage, they will wait you at the other stage. So it has already broke through 150. So next stage, I think it will be 155. Although they said that they won't give some intervention based on the price, the Japanese yen price. They don't have the exactly the price target, but every time when they invent, there is a target like 140, 145, 150. So next part, I think 155.
That
I don't care what they say, but I just care what they do, right?
Well, you can't care much about they say.
But 150, I won't short it.
I will.
Next one, I will do like 155.
I wouldn't short as well on 150. And I was actually showing to the guys on the webinar because, you know, remember November last year, October, November. Between those months, I can't remember the day exactly, but I've talked so many things about that. Anyway, so it was I think 20 something of October, and go into November, and we had a massive 9% move down, right?
Yeah.
So we did that massive down move, and then now on the start of the year in January, we've only been up. So just for comparison, JPY is the weakest currency at the moment of the G8 and G10 economies.
Yeah.
Right. Not emerging markets, because we do have Turkish lira, we do have all of the other currencies, but anyway, so the G10, it's the weakest currency at the moment.
Yeah,
so,
but just at the moment.
At the moment, exactly. I want to bring attention, is that the moment is not forever.
Yeah.
And maybe it's strong, and maybe it's going to strengthening on, Kuroda comes in and say some BS.
Yeah.
Right? Because that's what he knows what to say. He only knows to say, but he's not an actual act person, right? And for me, in my opinion, I'm not too keen to say those words. Looks like a manipulation was happening in Japanese yen last year. It looks like from the Japan bank, right? From the bank.
You can
of
say
Japan.
that.
Yeah. I don't like to use manipulation things because the market is not manipulated.
But the United States said that. Japan is the Forex manipulator. Yeah. But there is a list, but they last year they just get the Japanese out. But recently, I think they want to put it back. Yeah.
Well, I don't know what they want to do with Japan, but looks like a good long positions to be at the portfolio right now. Anyways, I was looking at Japanese government bonds, and one of the best performance bonds as well on the G10 group. 27% up in a month and a half. Can you imagine that? 27% up in a month and a half.
But you should know that if the United States start to cut the rate, it also goes up, right? So we're seeing the lowest rate. The highest rate.
Highest rate.
Yeah. So the lowest price in like 15 years. Yeah. But Japan is another thing. Yeah. But I agree with you. Yeah. It is rising crazily.
Anyways, now talking about a little bit, I have some of the interpretations that I had on the FOMC. I've read it through. I've took some notes. I want to read some of the things that they say, and I want to see if you are actually agreeing on what they say. Right. So in terms of the financial market developments, the FOMC discussed the financial market conditions, noting a modest easing, but emphasizing that conditions remained relatively tight compared to the start of the hiking cycle. Nominal treasury yields declining, especially at the shorter end of the yield curve, mainly due to lower expected policy rates. Equity prices reached new highs, primarily driven by large cap technology companies. And I want to talk about these because I know that you are a guy that likes to talk about tech companies, right? AIs and all of those things. However, broader equity valuations were more restrained, signaling a cautious optimism about economic resilience. There is the resilience that we were talking about.
Yeah.
US have been resilient since second half of last year.
Yeah.
It doesn't look like it will end anytime soon. And we'll continue, just fulfill our view that the US dollar will continue to be stronger. Right? Now, talking about a little bit about tech companies, I've seen so much things, like just Apple now. I know Apple is a tech company, a big tech company, right?
Yeah, of course.
Yeah, and they just released the Vision Pro thing. Nothing against it, but...
Have you tried it?
No, yeah, exactly. Yeah. If you have one, please let me try it.
I can't try it. I wear glass.
Oh, you can't?
Yeah, I can't wear contactless, so I can try it. Yeah.
It looks pretty cool.
Yeah.
I don't know how it's gonna, imagine like lots of people. Dave is laughing here, guys. Imagine lots of people doing this on the streets.
Yeah. Haven't seen yet, but many on videos.
Yeah. I've seen a guy eating on McDonald's.
Really?
And watching a movie on the McDonald's.
Actually, it seems weird.
Yeah.
Yeah, super weird.
Yeah. Anyways, so what do you think about all of this AIs? We have Elon Musk as well launching his like an actual robot that can walk and everything.
Yeah.
What do you think? Do you think
So-
we are gonna die?
So first of all, you mentioned Apple, you mentioned Tesla, right?
Yes.
However, these two are not this, on this fast-paced trend.
Ah.
Yeah. When we talk about AI, we are mainly talk about the NVIDIA,
NVIDIA.
of course, right?
Yes.
The best.
Yes.
And Google, like Microsoft, Amazon, and Meta, all of those. But Apple and Tesla has been like keeping behind when we talk about their performance of the stock price. They are just behind. So let's talk about these 5 AI companies, especially NVIDIA, which has just released the financial report this morning, right? And after the financial report release, it has risen 10%, reached to its previous high. Super good, yeah. So whether there is a bubble, I think definitely. Definitely there is a bubble because no one knows how they will perform. No one knows if like Microsoft will get enough money to pay NVIDIA.
Yep.
Yeah, no one knows. The only one who is profit from it is NVIDIA, right? So there must be some bubble there. Yeah. But on the other hand, the AI is doing good. They are providing a lot of sentiment to the market. They do have some product right now. Like recently we have Sora, which is a model can produce video, very good video.
Yep.
Much better than the previous model.
Right.
So people have starting to have a sense like if you put money in AI, they will get you some products. The more money you put, the more products you can get. So the currently the largest investment is from Microsoft to OpenAI, which is I think it's 10 million. Yeah,
10 million is the biggest.
Yeah, 10
Wow.
million right now. Yeah. However, the planning, the AI investment planning right now, we have seen 100 million and also 10 billion.
10 billion. Right, I was like,
Sorry about that. 10 billion, yeah.
10 million?
So right now it's 100 billion.
Oh, okay.
And 700 billion by OpenAI because he want to build his own chip, chip
yes.
empire.
Yes.
Yeah. So you can say that many of the investors, many of the empowerers, they are keep investing more money because they have some result there. They do have some more and more results.
If
They
you
have
put
better
money-
video, better content.
Yeah.
Better AI, general AI maybe
Yes,
in the
yes,
future.
yes.
Yeah. So right now it is a super strong trend. Yes, there is bubble, but the trend is still strong. So I would say in the next at least 1 or 2 months, or even the first half year, I think the previous I mentioned 5 AI companies will keep going up. But for Apple and Tesla, they haven't get their products right now. They have some thinking, they have some concept, but no
True.
products right now.
So I got your idea.
Yeah.
It's a completely 2 different things, right? It's more towards softwares and hardwares.
Yeah.
Like
Yeah.
Apple and Tesla, they have more hardwares.
Yeah. They are spending money.
It's spending money.
Yeah.
They are not actually investing money on softwares that will
Yes.
generate
Yeah.
AIs.
Yeah.
Okay, I see. That's
But however, you can say that the Tesla is like building AI for their auto driving, the software. Yes.
Yeah.
But no exactly product outside. They haven't like published something.
Yes,
right.
correct.
It's not like Microsoft or Google. They have already published something.
Yep.
Yeah, that's the difference.
Right.
Yeah.
Okay. Well, there you got it. There we go. Now, I want to talk as well about Australian dollar being heavily correlated with gold. What do you think about that?
No, I don't
when-
think about that actually.
No, you don't think about that?
Because when we say Australian dollar is close to gold, it is because behind those two items is US dollar. Yeah. And very close, right? Sometimes when I watch the Australian dollar versus Chinese yuan, I can see the exactly same pattern compared to euro dollar. So
Australian dollar, Chinese yen,
yeah,
same as euro dollar.
Yes, you can check. No matter you are using 1 hour chart, 4 hour chart, daily chart, they are not say completely, but very closely, which is also close to the gold price, because behind that is they are all based on US dollar. They are very sensitive to US dollar. It's not like euro like because euro is a very popular currency, so it has some stress there. It is not quite sensible. It is sensible, but not that much. But Australian dollar, it is a very small currency. It is very sensible to US dollar. And gold price is very sensible to the bond yield, and also bond yield is related to the US dollar. So it seems like the gold price is related to the US dollar, and the same pattern with Australian dollar. I think that's the reason behind that.
Okay, so all of them holds a sort of a basket where there is the US dollar.
Yeah.
Got it. Okay. So what are your, any trade that you would be willing to trade in the next maybe month, 2 months?
Tonight, not
tonight.
Yeah, tonight. The PMI is a big thing.
Yeah, US dollar. What are you looking at?
I will short euro dollar.
Euro dollar.
Yeah.
Yeah, I'm shorting euro dollar as well.
Shorting it. I don't think the PMI of German is good. I also don't think the PMI of United States is bad. I think US is good, Europe bad, so the euro dollar will get in short by me. Tonight, just tonight.
Cool. Yeah, same view as mine. I do believe that euro dollar, there's a potential to continue to go down, especially today as the PMI. As we just talked about today, hopefully we could help you guys. That's what, probably 20 minutes, 15 minutes, 20 minutes. Do you have anything you want to say for them, or?
Just one other thing, like I'm shorting euro dollar.
Yes.
I'm also shorting Aussie dollar and also shorting gold, because they have same the pattern.
Yeah. I know.
Especially in short term.
I know.
Or in day trade.
I've been shorting. If I was with my phone, I could show you. I've been shorting gold, Aussie dollar, and euro dollar since 1 week before the NFP.
Okay. Yeah. That's good.
So I got all of that big move down. Because I did the US CPI coming, and I'm like, that's going to be very hawkish.
Yeah, super.
So, and then we had a question from one of the journalists talking about March cut. Then Jerome Powell said, no, we're not looking to cut. And then even more hawkish movements for the US dollar. So there you have it. We have all portfolio from Peter. It's quite similar as my portfolio, I guess. So guys, thank you so much for watching us. If you are on YouTube or if you are listening to us in other platform, thank you to listening to us. And if you have watching us on YouTube, please give us a thumbs up. Subscribe to your channel. Send this podcast to your friends. And we ended up here. All right. Thanks so much, Peter. Thanks for coming.
Thank you. Thank you, everyone.
All right. Thanks, guys. Bye-bye.
Bye-bye.